According to a recent report, a staggering 70% of investors who didn't diversify their portfolios during the 2020 market crash lost at least 30% of their investment value, with some losing as much as 50%. This stark reality is a harsh reminder that diversification is no longer a luxury, but a necessity in today's volatile financial landscape. The consequences of not diversifying can be devastating, and it's an issue that affects us all, whether we're seasoned investors or just starting to build our portfolios. The real-world consequences of failing to diversify are far-reaching and can have a lasting impact on individuals, communities, and even entire countries. For instance, during the 2008 financial crisis, many investors who had their portfolios heavily weighted in real estate or stocks saw their life savings evaporate, leaving them struggling to make ends meet. In countries like Greece and Spain, the economic downturn led to widespread unemployment, with some areas experiencing jobless rates as high as 50%. Meanwhile, in the United States, the crisis led to a surge in foreclosures, with over 9 million families losing their homes between 2006 and 2014. These are not just statistics. They represent real people who suffered greatly due to a lack of diversification. Building a resilient portfolio requires a deep understanding of diversification and its various strategies. At its core, diversification is about spreading your investments across different asset classes, sectors, and geographies to minimize risk and maximize returns. This can be achieved through a combination of stocks, bonds, real estate, commodities, and other investment vehicles. One key strategy is to allocate your portfolio across different asset classes, such as 40% in stocks, 30% in bonds, and 30% in alternative investments. Another approach is to diversify within each asset class. For example, by investing in a mix of large-cap, mid-cap, and small-cap stocks, as well as international and domestic stocks. It's also essential to consider factors like inflation, interest rates, and currency fluctuations when building your portfolio. In addition to diversification, it's crucial to have a long-term perspective and a well-thought-out investment plan. This plan should be tailored to your individual financial goals, risk tolerance, and time horizon. It's also important to regularly review and rebalance your portfolio to ensure it remains aligned with your investment objectives. Furthermore, investors should be aware of the various risks associated with different investment vehicles, such as market risk, credit risk, and liquidity risk, and take steps to mitigate these risks. By doing so, investors can build a resilient portfolio that can withstand market fluctuations and help them achieve their long-term financial goals. Another critical aspect of building a resilient portfolio is to stay informed and up-to-date with market trends and economic developments. This includes monitoring economic indicators, such as GDP growth, inflation rates, and unemployment numbers, as well as keeping track of market news and trends. It's also essential to be aware of the potential impact of global events, such as trade wars, elections, and natural disasters, on your investments. By staying informed, investors can make more informed decisions and adjust their portfolios accordingly. In conclusion, building a resilient portfolio requires a combination of diversification, long-term planning, and ongoing monitoring. By spreading your investments across different asset classes, sectors, and geographies, you can minimize risk and maximize returns. It's also essential to stay informed and adapt to changing market conditions. Ultimately, a well-diversified portfolio is not just a means to achieve financial success. It's a way to secure your financial future and protect yourself from the uncertainties of the market. As you consider your own investment strategy, remember that diversification is not just a means to minimize losses, but also a way to maximize gains. And by taking a proactive and informed approach to building your portfolio, you can create a resilient financial foundation that will serve you well for years to come. The key to a successful investment strategy is to approach it with a clear understanding of the risks and rewards. And by doing so, you can unlock the full potential of your portfolio and achieve your long-term financial goals. In the end, it's not just about the money. It's about the freedom and security that comes with having a resilient portfolio. And by taking control of your investments, you can take control of your financial future. By building a resilient portfolio, you can ensure that your financial well-being is secure, regardless of what the market may bring, and that's a fact that's worth more than any investment. As the market continues to evolve, One thing is certain. A well-diversified portfolio will always be the best defense against uncertainty. And by embracing this strategy, you can navigate even the most turbulent of markets with confidence. In a world where economic uncertainty is the new norm, a resilient portfolio is no longer a luxury, but a necessity. And by prioritizing diversification, you can ensure that your financial future is secure. The benefits of diversification are clear, and by taking a proactive approach to building your portfolio, you can reap the rewards of a resilient financial foundation. By spreading your investments across different asset classes, sectors, and geographies, you can minimize risk and maximize returns, and that's a strategy that's hard to beat. In the world of investing, knowledge is power, and by staying informed and up-to-date with market trends and economic developments, you can make more informed decisions and achieve your long-term financial goals. The path to financial success is not always easy, but with a well-diversified portfolio, you can navigate even the most challenging of markets with confidence, and that's a fact that's worth remembering. By taking control of your investments, you can take control of your financial future, and that's a powerful feeling that's hard to match. In the end, it's not just about the investments. It's about the life you want to lead. And by building a resilient portfolio, you can create the financial freedom to pursue your passions and live life on your own terms.